All right, so let's say you're trying to wrap your head around UnitedHealth Group, specifically from an investment angle.
Okay.
Smart move, by the way. It's a big deal. They're a total giant in U.S. healthcare.
Yeah.
And what makes them even more interesting is they've got a presence in both insurance through UnitedHealthcare and on the services side with Optum. So it's like they've got this whole healthcare game covered.
Yeah, that's a pretty good analogy. And it's that two-sided presence that makes them really fascinating to analyze.
Right. So we're going to break down UNH. We'll start with their origins, kind of like a little history lesson. Then we'll get into the nitty-gritty, their financials, and we'll look at the moves they're making strategically. And finally, we'll see where they fit in the whole competitive landscape. So by the end, you'll have a solid grasp of their potential, the risks involved, of course, and ultimately what it all means for someone thinking about investing.
Sounds like a plan.
Let's rewind all the way back to 1977. That's when UnitedHealth Group first appeared on the scene. They set up shop in Minnetonka, Minnesota, but they also have a major hub in Washington, D.C., which makes sense when you think about it. A lot of healthcare decisions are happening in the capital.
For sure. And that connection to policy early on probably played a role in their growth. You know, they've become this powerhouse with two main arms. On one side, there's UnitedHealthcare, that's the insurance giant everyone knows. And then you've got Optum, the service provider. And Optum itself is a whole world, split into Optum Health, Optum Insight, and Optum Rx. They cover so much ground.
Okay, let's get into the numbers then. We've got their 2023 10K and the latest quarterly report. That's the Q3 2024 10Q for those following along. When you look at these financials, what's the first thing that jumps out at you?
Well, the revenue growth is definitely eye-catching. I mean, in 2023 alone, they had a 13% jump, and that's with all their segments contributing. UnitedHealthcare and all the Optum branches, Health, Insight, Rx. It seems like their diversification strategy is paying off.
Yeah, that's a positive sign. What about their operating margin?
It dipped a little in 2023, but it's been pretty stable overall.
And their net earnings?
Healthy.
Trending upwards.
Strong cash flow from operations, too. Though I see they're putting a good chunk of that towards acquisitions.
And that brings us to a key point for any potential investor. UnitedHealth Group, they're a company that grows by acquiring. They're not afraid to spend to expand their reach, whether it's buying up new tech or bringing other healthcare providers under their umbrella. As of the end of September 2024, they had something like $5 billion worth of acquisitions in the pipeline.
So they're not sitting still, that's for sure.
Right.
And their commitment to technology seems like a big piece of this. They're really pouring resources into streamlining their systems, building out their capabilities, trying to stay ahead of the curve, which makes sense in an industry that's constantly evolving thanks to tech. Exactly. And all of that ties directly back to their financials. Tech investments can make them more efficient, potentially cutting costs down the line. And those acquisitions, well, if they play their cards right, those acquisitions could really supercharge their revenue growth. But of course, there are two sides to every coin. We've got to look at the potential downsides, too.
Right, because no investment comes without risk. What are some of the red flags we should be watching out for with UNH?
Well, smoothly integrating those acquisitions is a big one. Anytime you bring in a new company, there are going to be bumps in the road. And then there are the regulatory changes impacting government healthcare programs. Medicare and Medicaid are huge players in healthcare. Any shifts in those programs can really ripple through a company like UNH. And of course, there's the rising cost of healthcare itself. That's a constant pressure.
It's like a three-headed beast. Competition, regulations, and rising costs. Speaking of competition, let's look at where UnitedHealthcare stands in the market. They're facing some serious competition in the commercial risk market, right? Small businesses, large corporations, individuals, everyone wants a piece of that insurance pie.
It's a crowded space, that's for sure. And then there's Medicare Advantage. That's a program that's getting more and more popular with seniors.
Hold on, can you break down Medicare Advantage for us? What exactly is it? And why does it matter so much for a company like UnitedHealthcare?
Sure. Medicare Advantage is basically a private insurance alternative to traditional Medicare. Seniors can choose to enroll in these plans offered by companies like UnitedHealthcare. And the government pays those companies a fixed amount per enrollee. It's been a huge growth area for UNH. But there are some challenges on the horizon. We're seeing funding pressure on these plans, and the costs of caring for seniors, especially outpatient procedures, are going up. That puts a squeeze on their margins.
So it's a balancing act. They need to attract seniors with these plans, but they also have to make sure they can afford to provide the services. What about Medicaid? Where do they fit into that picture?
Medicaid is a government program for low-income individuals and families. It's another significant source of revenue for UNH, but the rate environment for Medicaid plans is often under pressure, and that can impact their profitability in that segment.
So it's not all smooth sailing for their insurance business. Sounds like you're navigating some tricky waters. But what about Optum? How are they positioned in their markets?
Overall, Optum seems to have a pretty good foothold. Optum Insight, with its focus on software and data analytics, the kind that connects payers and providers, they have a lot of growth potential. Healthcare is becoming increasingly data-driven, and Optum Insight is right there riding that wave.
So they're kind of like the brains behind the operation, helping to streamline and optimize the whole system.
Exactly. And then there's OptumRx, their pharmacy benefit manager. They're benefiting from this trend of integrating pharmacy, medical, and even behavioral care services. It's all about creating a more holistic approach to healthcare.
That makes sense. But let's be real. Competition is fierce across all these areas, right?
You got it. They're up against established players and new companies in every corner of the healthcare market. It's a constant battle to win customers and market share.
Okay, so we've got this backdrop of a company with a really interesting history, a complex structure, and a whole lot of moving parts. Let's shift gears a bit and look at what makes UnitedHealth Group potentially attractive to investors.
All right, let's break down their strengths. First thing that stands out is their diversified business model. They've got both the insurance and services sides of healthcare covered. That gives them a level of stability many companies would envy. Plus, they've proven they can make money. Their financial performance has been consistently strong. They've got the revenue and earnings growth that really gets investors' attention.
It's like they've got multiple engines driving their success.
Exactly, and they're not afraid to put their foot on the gas. Their focus on technology and innovation is clear. And those strategic acquisitions, while they do come with some risks, they're aimed at expanding their reach and boosting their capabilities. They're playing the long game.
And they're sharing the wealth, quite literally. Remember that dividend increase they announced back in June 2024? It's up to $8.40 per share annually now, up from $7.52. That's a nice bonus for investors. And it signals they're confident in their ability to keep generating cash.
Definitely a good sign. But before you get too excited, remember those risk factors we talked about earlier? Competition is fierce, and it's only going to get tougher. And the regulations are constantly changing, especially when it comes to government programs like Medicare and Medicaid. Those are huge revenue sources for UNH. And then there's the elephant in the room, the rising cost of medical care, especially for seniors and anyone needing specialty drugs.
It's a tough balancing act. On one hand, they need to keep costs under control to stay competitive and profitable. But on the other hand, they can't compromise on the quality of care they're providing, especially if they want to keep those Medicare Advantage enrollees happy. What else should investors be keeping an eye on when it comes to risk?
Well, cybersecurity is a major concern for any company dealing with sensitive data. UNH is no exception. A data breach could be devastating to their reputation and their bottom line. And remember, all those acquisitions they're making, actually integrating those companies and achieving those expected synergies is no easy feat. It adds a whole layer of complexity and risk that investors need to consider.
So it sounds like due diligence is key here. Investors really need to dig deep, beyond the headlines, to really understand UNH's business model and the challenges they're facing.
Absolutely. This is just scratching the surface. There's so much more to uncover.
All right, we've covered a lot of ground in this first part. We've explored UNH's background, their financials, their goals, and how they're handling the competition. But there's more to come.
Let's dig a little deeper into their approach with technology, because that seems to be a defining characteristic of their strategy. It's not just about streamlining processes. They're really pushing boundaries in areas like artificial intelligence and personalized medicine.
Okay, now we're getting into the really interesting stuff. Can you give me an example? How is UNH using AI to actually gain an edge?
One area where they're making some serious waves is AI-driven diagnostics. Just imagine a world where algorithms can analyze medical images and spot those early signs of diseases like cancer more accurately and efficiently than even human radiologists. That's the power of AI. And UNH is investing heavily in this space through partnerships with tech companies and developing their own AI platform.
Wow, that's a game changer. It could completely revolutionize how we diagnose and treat diseases. What about personalized medicine? How are they leveraging technology there?
They're using data analytics and genomics to create those personalized treatment plans based on a patient's unique genetic makeup and medical history. This could mean more effective treatments with fewer side effects and potentially even prevent diseases before they even develop.
That's incredible. It's like healthcare is shifting from this one-size-fits-all approach to something truly personalized.
Exactly. And UNH is positioning themselves to be a leader in this transformation.
Okay, so they're making these bold moves in technology. But let's not forget about those acquisitions. We were talking earlier about how they use them as a growth strategy. But how do they actually decide who to buy? Is it just about getting bigger? Or is there a smarter strategy behind these moves?
They're definitely not just randomly buying companies. There's a method to their madness. If you look back at their history of acquisitions, you'll notice a pattern. They tend to target companies that either complement their existing businesses or let them enter new markets, high-growth markets, like their recent acquisition of Change Healthcare. That's a healthcare technology company focused on data and analytics. So that strengthens Optum Insight's position in that space.
So it's like they're putting a puzzle together, strategically adding pieces that fit into their vision.
Exactly. And their vision seems to be becoming a true healthcare powerhouse, one that can provide a full range of services, from insurance to data analytics to direct patient care.
It's a bold ambition.
Yeah.
But they certainly have the resources to pull it off. And the track record. Let's shift gears a bit and talk about their financial strategy. We saw from their 10K in the latest quarterly report, they're bringing in a lot of cash. What are they doing with all those profits?
They're using that cash in a few key ways. First, like we've already discussed, they're investing a lot in acquisitions and technology. That's crucial for staying ahead in such a rapidly changing industry.
Right. It's like they're plowing those profits back into the business.
Yeah.
To fuel future growth.
Exactly. But they're also rewarding their shareholders through things like dividends and share buybacks.
Yeah, we touched on that dividend increase earlier, which is always good to see as an investor. What about those share buybacks, though? Why do companies do that?
Share buybacks essentially reduce the number of outstanding shares, which can increase earnings per share and make the stock more attractive to investors. It's a way to give back value to shareholders while also potentially increasing the value of their holdings.
Interesting. So it's like they're playing a multi-dimensional chess game.
Yeah.
With their capital, balancing investments and growth.
Yeah.
With giving returns to shareholders.
Exactly. And that balancing act is something investors should really look at. Are they investing enough to stay competitive? Are they giving enough back to keep shareholders happy? These are all key questions to be asking.
All right, let's move on to a topic that always gets investors talking. Insider trading. It can feel a little mysterious, trying to figure out what those insider moves might mean, but is it really worth paying attention to?
It can be, but you have to be careful not to read too much into individual transactions. Remember, insiders are people too. They might buy or sell stock for a whole bunch of reasons. Some have nothing to do with the company's performance.
So like an executive might sell some stock just because they're rebalancing their portfolio. Or maybe they need to pay for their kids' college tuition.
Exactly. Or they might buy stock because they're exercising options or taking part in an employee stock purchase plan. Those are pretty routine transactions. They don't necessarily tell you anything about their view of the company's future.
So how do we separate the signal from the noise? What should investors be watching for when they're trying to analyze insider trading activity?
It's more about the patterns than isolated events. If you start seeing a bunch of insiders buying or selling at the same time, especially if it's outside their normal trading behavior, that might be something worth investigating further.
So it's kind of like a collective vote of confidence.
Exactly. And remember, insider buying is usually a stronger signal than selling. Insiders might sell for a lot of different reasons, but they usually only buy if they believe the stock is undervalued and likely to go up.
Okay, that makes sense. So armed with all this knowledge, what can we say about recent insider trading at UnitedHealth Group? Have there been any whispers from those in the know?
Looking at the data, there hasn't been any significant buying or selling lately. Things have been relatively quiet on that front. No major red flags or flashing green lights so far.
Okay, so no insider tips to sway our decision, at least not right now. Right, let's widen our view a little and look at UNH through the lens of Porter's 5 forces. That's a classic framework for analyzing how competitive an industry is. Can you remind us what those 5 forces are?
Sure. Porter's 5 forces are: 1, the threat of new entrants. So how easy is it for new competitors to jump into the market? 2, the bargaining power of buyers. So how much leverage do customers have to get lower prices? 3, the bargaining power of suppliers. How much power do those suppliers have to raise prices? 4, the threat of substitute products or services. Are there other options out there that could meet those same customer needs? And 5, rivalry among existing competitors. So just how intense is the competition within the industry?
Okay, so how do these forces play out in the world of healthcare, specifically for a company like UnitedHealth Group?
Well, let's start with that threat of new entrants. The healthcare industry, it's always been tough to break into. You need massive capital investment. You're dealing with complex regulations and reimbursement systems. It's not an easy game.
So that's, guess, a lower threat of new entrants, right? It's not like anyone can just decide to be a health insurer overnight.
That's true to some extent. But the landscape is definitely changing. We're seeing some disruptors emerging, especially in the tech space. And telehealth. These are companies using technology to offer healthcare solutions that are more convenient, affordable, and personalized. Think virtual doctor visits, remote patient monitoring, AI-powered diagnostics, all areas where new players are really shaking things up.
So while those traditional barriers to entry are still high, UNH can't afford to get complacent. They have to be flexible and innovative to keep up with these new competitors.
Exactly. Now let's talk about the bargaining power of buyers. In healthcare, buyers are a mixed bag. You've got employers who provide health insurance for their employees, government programs like Medicare and Medicaid, and individuals who buy insurance themselves or pay for healthcare out of pocket.
Okay, so a lot of different players with different levels of influence. How does that impact a company like UNH?
Well, those big employers and government programs, because of their size, they have more leverage to negotiate better deals. With insurers like UNH, they can demand lower premiums, better coverage, and just more value for their money.
So it's this constant back and forth between those paying for healthcare and those providing it.
Exactly. And UNH has to find that balance between keeping their buyers happy and keeping their own business profitable.
Sounds like a delicate dance. What about the power of suppliers? Who are the key players that UNH has to deal with on that side?
Think about hospitals, physician groups, pharmaceutical companies, and medical device manufacturers. These are the folks who provide the actual goods and services UNH needs to operate. And their power to bargain depends on a few factors, like their size, their share of the market, and whether there are substitutes for their products or services.
So like a big hospital system.
Yeah.
With a strong presence in a certain region, they would have more leverage to negotiate higher reimbursement rates from UNH.
Exactly. And a pharmaceutical company with a really popular drug that has no generic version. They would also have a lot of bargaining power. UNH has to maintain good relationships with these suppliers, but they also have to be smart about costs and negotiate good contracts to keep those premiums competitive.
It sounds like they're playing defense all the time, trying to make both buyers and suppliers happy while protecting their own profits.
That's the reality of being in such a complex and competitive industry. There's pressure coming from every direction.
All right, what about the threat of substitutes? Are there other ways for people to get health care that could potentially shake things up for UNH?
Absolutely. We're seeing a shift towards healthcare models that are more focused on the consumer, with an emphasis on convenience, affordability, and personalized services. Telehealth, for example, is growing rapidly. People can now consult with doctors remotely, through video chat or even just a phone call.
Yeah, telehealth has really changed the game, especially after the pandemic. What other substitutes are we seeing popping up?
Retail clinics are becoming more popular, the ones you find in drugstores and supermarkets. They offer basic healthcare services at lower costs and with more flexible hours. And then there's the rise of home-based care, where healthcare professionals come right to the patient's home.
So it's like healthcare is moving beyond the traditional doctor's office or hospital.
Exactly. People have more choices than ever, and they expect more for their money.
Which means UNH has to adapt and innovate to keep up.
That's right. They can't afford to ignore these trends.
Okay, let's finish up Porter's 5 forces by looking at the competition between existing companies. How would you describe the competitive landscape for UNH?
It's intense, to say the least. Healthcare is a battlefield. With so many players fighting for market share and profits, UNH is up against other big health insurers, managed care organizations, and even those tech-driven disruptors we talked about earlier.
So the constant battle for customers.
Exactly. And that means UNH has to be constantly innovating, setting themselves apart from the competition, and finding ways to offer a better experience for their customers.
So they're not just competing on price, but on things like quality of care, convenience, and innovation.
Exactly. It's a battle on multiple fronts.
Okay, Porter's 5 forces has given us a good framework for understanding the pressures that UNH faces. But let's switch gears for a moment and talk about their reputation and their commitment to corporate social responsibility.
That's a crucial aspect to think about, especially now when investors are really considering a company's social impact and ethical practices.
Right. It's not just about profits anymore. It's about purpose. So how does UNH measure up in this area? What's their track record on social responsibility?
They've made some commitments to several initiatives, including reducing their carbon footprint, promoting diversity and inclusion, and supporting community health programs. They've even started programs to address social determinants of health, recognizing that things like poverty, lack of access to healthy food, and inadequate housing can have a huge impact on people's well-being.
That's good to hear. But are there any areas where they've been criticized or could do better?
Pricing transparency is a big one. Consumers and policymakers are pushing for more clarity on how healthcare costs are determined and how insurers are using those premiums they collect. There's a lot of frustration and distrust around healthcare costs, and UNH, being the biggest player, is often in the hot seat.
So they need to prove they're using those premiums responsibly and giving real value to their customers.
Exactly. And they also face criticism about their role in managing healthcare costs, which can sometimes be seen as denying necessary care or limiting patient choices.
It's a tough balancing act for sure, trying to keep costs in check while making sure people have access to the care they need.
Right.
How are they handling that tension?
They're trying to find ways to make care more efficient and affordable without sacrificing quality. They're investing in preventative care, chronic disease management programs, and new models of care delivery that aim to improve outcomes while reducing costs.
So it's not just about slashing costs, it's about finding better, more effective ways to provide care.
Exactly. It's about shifting the focus from treating illness to preventing it and managing chronic conditions better so people don't end up in the hospital or the emergency room.
Okay, so it sounds like they're making progress in social responsibility, but they're also getting some valid criticism. It's a mixed bag, as with most things in healthcare.
Right.
What's the main takeaway for investors?
They really need to look beyond the PR and marketing to see how committed UNH is to social responsibility. Are they actually doing what they say? Are they really trying to make a positive impact on the healthcare system and the communities they serve? These are important things to think about.
Right, because in the end, a company's reputation and their commitment to doing good can have a big impact on their success in the long run. It's not just about feeling good, it's good for business.
Exactly. Investors are realizing that more and more.
All right, we've covered a lot in this second part. We dug into UNH's technology plans, their strategy for acquisitions, how they manage their finances, what insiders are doing, the competitive landscape using Porter's 5 forces, and their social responsibility efforts. That's a lot to take in.
It's a complex company, but hopefully we're starting to get a clearer picture of what makes them tick and what investors should be paying attention to.
Right, but we're not finished yet. There's still more to explore. Okay, let's talk about how to actually value a company like UnitedHealth Group. I mean, it's one thing to understand their business, their industry, but how do we put a price tag on all that future potential? How do investors decide if the stock is a buy or not?
Well, there are a lot of different valuation methods out there, but one that's commonly used for companies like UNH is the discounted cash flow analysis, or DCF for short.
Okay, I've heard of that, but honestly, it sounds a little intimidating. Can you break it down for us? What is DCF analysis, and why is it so important for valuing a company like UNH?
Sure. Basically, DCF analysis tries to figure out the intrinsic value of a company. And it does that by looking at its expected future cash flows. It's kind of like trying to predict how much cash the company will generate over a certain period of time, say 5 or 10 years.
So it's all about forecasting the future.
Exactly. But there's a twist. We don't just take those future cash flows at face value. We have to discount them back to their present value.
Why do we do that?
Because $1 today is worth more than $1 tomorrow. That's what we call the time value of money. We have to consider that we could invest that $1 today and earn a return on it. So we use a discount rate to adjust those future cash flows and bring them back to what they're worth today.
Okay, that makes sense. But how do we actually apply this to UnitedHealth Group? Where do we even start?
Well, the first step is to come up with those cash flow projections. We have to estimate how much cash UNH will generate each year over our chosen time frame. This involves looking at their past financials, considering industry trends, and factoring in their strategic plans, like those acquisitions and technology investments we talked about earlier.
So it's a bit of an art and a science.
Exactly. And that's where it gets really interesting, because different analysts might have different projections based on their own assumptions and interpretations.
So there's some subjectivity involved.
Absolutely. That's why it's important to understand the reasoning behind those projections and make sure they're reasonable.
Okay, let's say we've done the calculations and we've got our cash flow projections. What's next?
We need to determine the right discount rate. This rate reflects how risky UNH's business is. A higher risk company would have a higher discount rate, which would mean a lower present value for those future cash flows.
So it's like we're being more cautious with those riskier cash flows. Okay, we've got our cash flow projections and we have our discount rate. What's the final step?
We put those numbers into a DCF model, which basically discounts those future cash flows back to their present value. This gives us a single number. That represents our estimated intrinsic value for UNH today.
So we're taking all those future cash flows and boiling them down to a single snapshot of what the company's worth right now.
Exactly. And then we compare that intrinsic value to what UNH is currently trading for in the market. If our intrinsic value is higher than the market price, it could mean the stock is undervalued and might be a good buying opportunity.
So that's how investors use the DCF to make decisions. But is it perfect?
Not at all. It's just one tool among many. It relies on a lot of assumptions that could be wrong, and it doesn't capture everything about a complex business like UNH.
So it's a piece of the puzzle, not the whole picture.
Exactly. Investors should use it along with other methods and think about a lot of different factors before making any investment decisions.
All right, that makes sense. So the DCF can be useful, but it's important to use it wisely and not rely on it completely. Any other tips you can give us about valuing UNH? What are some key things investors should be thinking about?
One crucial factor is their growth rate. UNH has a strong history of growth, both in revenue and earnings, partly driven by those acquisitions they've been making. But the question is, can they keep up that pace? The healthcare industry is becoming more and more competitive, and those regulatory challenges aren't going away anytime soon.
Right. And we can't forget about those rising medical costs. That's a constant pressure that could impact their profits.
Exactly. So investors need to figure out if UNH can keep growing at a rate that makes their current valuation reasonable.
Okay, growth is key. What else?
Their capital allocation strategy is another important thing to look at. We talked about how they're using their cash for acquisitions, technology, dividends, and buybacks, but are they finding the right balance? Are they investing enough in future growth while still giving good returns to their shareholders?
It's a lot to juggle.
Exactly, and investors need to assess whether they're juggling effectively.
All right, we've covered a lot of ground today. We explored UNH's background, their financials, their goals, the competition, those technology advancements, and even how to value a company like this. What's the key takeaway from all of this?
UnitedHealth Group is a fascinating and complex company. They're a major player in the U.S. healthcare system, and they're making big moves to adapt to all the changes happening. But they also face some serious challenges, from intense competition to regulatory hurdles and those ever-increasing healthcare costs.
So a company with a lot of potential, but also some risks.
Exactly. And that's the bottom line for investors. There's no easy answer when it comes to UNH. It's a company that requires careful thought, thorough research, and a willingness to accept some uncertainty.
I think that's a great point to end on. We've given you a framework for understanding UNH and the key factors to consider if you're thinking about investing. But in the end, the decision to invest is up to you.
Absolutely. We're here to provide information and insights, but we can't make that decision for anyone.
Well said. On that note, I think it's time to wrap up this episode. We've explored a lot, and I hope our listeners found it helpful and informative. As always, we encourage you to do your own research, think about different perspectives, and stay informed about the ever-changing world of healthcare.
Investing is a journey, not a destination.
Very true. Until next time, happy investing.